The first panel is dedicated to an idea that CEOs can also, alongside with the financial resources, share their network and their advice. And the idea is that today's CEOs should and can be the qualified angel investors of tomorrow. And our distinguished panel group is going to share their thoughts. Is it possible? How it can be achieved? And what can be the impact? Within this panel, we have Asma Bashir. She's a chairwoman of the Centuro Global, coming from UK, and she's the moderator also of the panel itself. Dear Asma, the floor is yours. Paul Delaney, CEO of Turk Telecom. Peter Cowley, President of EBAN, European Trade Association of Business Angels, and Ugur Talayhan, CEO of Swiss Hotel Bosphorus, which we are guests for the third time in a row. Please, your 30 minutes.
Hi there, good afternoon everyone. So as Ivan has just introduced us, my name's Asma Bashir and I'm here to moderate this panel discussion. So as we've talked about earlier, the session is to do with CEOs and their transition into becoming angel investors. So we're joined by a very experienced panel of speakers here. Paul Delaney, that you already was given his keynote speech earlier and you've heard from already, CEO of Turk Telecom and a serial angel investor himself. Then to my left is Peter Cowley, who is actually from the UK, president of EBAN, and also a serial award-winning angel investor himself and entrepreneur. We then have the CEO of Swiss Hotel, Mr. Ugur Talayhan, and I hope I've pronounced that correctly. Thank you. So the topic today is an interesting one and fairly new from my perspective as well. So we have a culture, worldwide culture of entrepreneurs and new entrepreneurs coming into the ecosystem where they're producing new ideas, coming up with new ways of resolving problems and issues that we see day to day. However, most of these companies face the problem of access to finance and access to capital, which is limited through, I think, most countries. And having seen and spoken to so many different people from around the world over the last couple of days, what I can see is everyone shares the similar problem that everyone is having, which is access to finance. So the purpose of today is really to talk to our panel, to share experiences and to understand how we can look at other ways where entrepreneurs, startups, scale-ups can have access to capital and whether the CEOs of multinational companies can be converted into becoming angel investors and what are the challenges that are posed with that. So I'm going to ask the first question to Mr. Peter Cowley, if I may. So just in order to set the scene, to give some kind of a sense in terms of the subject matter, I think it would be really helpful, given that over the last sort of 10 years you've explained that you've been an angel investor yourself, so you also are a president of the European Business Angels Network, and having come across different CEOs across your path over the last few years, what are the challenges that you see are with this issue of converting them into becoming angel investors?
Yes, okay. Well, let's just explain my background. So I've had 14 entrepreneurial journeys, of which I've been CEO in all of them, but that doesn't really apply, I think, to what this session's all about. This is CEOs of large corporates. Paul is a great example of that, who's been on several large corporate journeys. So if you take the CEO, most of the people I co-invest with in the Cambridge community have been CEOs of their own startups. So they have grown them and they've exited them, usually only once, sometimes 2 or 3 times, and they've exited them for a sum of money that's usually between about £5 million, which sounds a lot but isn't all that much by exited CEO, and perhaps £500 million. And so if they're running a business that's selling for 500 million, that's probably several thousand people when they exit, because they probably only have 10-20% of the business if they're growing it themselves. Is £5 million, it might only have 40 people or 50 people because it's sold as an IP business. The experiences of these characters are very different from ones who have been professional managers who haven't necessarily built a business. And so one's got to distinguish that straight away, is that the smartest money of all, and Paul may disagree with this, is from entrepreneurs who have started the business, taken the risk, have the T-shirt, as they say. They've experienced the horrible things, having to fire people, hiring the wrong people, running out of cash, all the other things. Whereas a professional CEO, and there are plenty of professional CEOs who've probably been on entrepreneurial journeys, but many haven't because they've gone up through some sort of corporate life, have not done that. They've had people to fire other people generally, etc. So their experience is quite different. The best money definitely will come from, as you'd expect, people who've experienced it before, because they'll be able to share those experiences and mentor and coach. But that isn't the only source of capital, of course, isn't it? And what this session's about is the CEOs of bigger businesses, where we haven't really defined that, but I imagine you're meaning thousands of employees, up to hundreds of thousands of employees, and how they will become angel investors. They, of course, what they've got is wonderful experience, probably of a scaled company, something an entrepreneur won't have got or won't have got much of. They have probably got a Rolodex for connections, which is very much better at the top level, and this might be government level, it could be capital, it certainly will be suppliers. I mean, I work with a guy who managed to pick up the phone to, this is for a smallish startup, to the CEO of a company that's got 40,000 people in the UK, and just have the conversation. There's no way that I could do that, even though if I've been the CEO of an angel investor. So that brand and that presence is really strong. There are downsides, though, of the two versions. Shall we cover that later? Or?
Yeah, I think it's an interesting thing, because I would like to cover the two versions. I mean, I have personal experience of being a CEO of my own company, and then having worked with multinational companies from around the world on a global level with the CEOs, and can see the benefits of how those CEOs could be converted to angel investment. So I think the argument sits on both sides, and I agree that obviously the benefit of Paul here having CEO of a large telecom company, and yourself obviously looking at it from an entrepreneurial journey, I think I'd like to debate both sides and see. Yeah.
Well, let's pass over to Paul next, shall we, and then come back. Yeah,
thanks. I don't actually disagree with what you said, because I'm not really comparing that executives in position, whether they are CEOs or whether they are just executives of a company who are earning above average income and would like to invest some of that money to do good things. The only value, frankly, that they add in general is that one is the money and the other one is the contacts. And that's why in the last session, last year, I was always saying that make sure that these type of executives don't interfere in the startups, because they are more kind of like experienced in a conventional structure where they themselves are not actually ultimately responsible. There's a founder, there's a board, etc. They themselves are doing a job function. A CEO is an employee. May look like he isn't, but he is an employee. Okay, he has a job to do, and he has to do that job. If that job is not to invest, he's not going to be investing, if they give him room to invest. So the idea that we had about this angel investments here in this country is that once they are in position, perhaps they could also encourage their company owners to participate in some level of businesses that are affiliated to what they do, and then risk some of their income in promoting the business of their company, and their owners shouldn't see that as a conflict. That's the only value they add to, and the contacts never to be underestimated. I mean, people that come from large corporates have very good connections, and they can open doors that entrepreneurs, successful entrepreneurs, maybe didn't need to knock. Now, if you want to tap entrepreneur money for angel investments, frankly, that's the easier thing to try, because if you get it, great, and if you don't get it, but definitely I would never compare the value of a successful founder, CEO, who actually built and ran and, if anything, exited or listed a company, with a career CEO who actually is assigned to do a job like any other. And that's why I don't like the title CEO here. I believe this should be executives of companies encouraged to invest. And I have seen examples where this made sense for them. And I've also seen when they think they know and they interfere. In some cases, they even know less than the entrepreneurs who think they know. That's another problem, of course, of entrepreneur startups. I'm sure Peter knows more about those, which is a bigger problem than the CEOs, because they think they know. The CEO may know he doesn't know. So there is hope. Thank you.
Okay, so Mr. Affan, can I ask you the same question? I mean, what's your opinion on this subject?
Yes, I think like the poll mentioned, I'm the one of the executives who works here and who does the job. And coming from my background as an ex-chef, I've been always approached to go or work, found to be an angel investor or work with angel investors. But again, I think being CEO or being someone who really takes the vision of CEO is different, which I totally agree with Paul. And I think I'm one of the executives that also did not take the risk of and focused on the career, moving around the world and working towards the good and successful CEOs. And that's why I'm here, that maybe I can learn or I can see what's the future possibilities and opportunities.
Okay, great. So, Paul, I would like to ask you this. So, we're talking about converting CEOs into angel investors. And the purpose behind it is to raise capital. So if everyone in this room probably shares the same opinion that there is lack of access to capital to be able to give to entrepreneurs, and somewhere at lunch today somebody mentioned to me that the US being the most advanced in terms of access to funding, to startups ecosystem, less than 1% of startups actually get funded. So that's a staggeringly low figure. Now, given that we are focusing around capital and we can see the challenges with multinational CEOs not having been entrepreneurs themselves, there is still a large number of CEOs within that particular category around the world. You can see the big four partners, for example, who come up with big paychecks on retirement or even sort of leading up to their bonuses that they get. You see the bankers, you have other CEOs. How can we educate them or encourage them to become angel investors or part of a network that actually holds the fund for them?
Of course, just please consider that what we have been speaking about here in this particular country is a country where there's a tax incentive for you to invest. Mm-hmm. So if you are in a job and you're earning a certain amount of money, let's say you're earning $100,000 a year, for example, let's say, and a part of that tax is $20,000, $30,000, is something which the employer is paying on your behalf. It's part of your salary, but that's the part that goes to the government. And the government says that if you agree to invest some of that money as an angel investor while you are in a job, so that's kind of like easy money to get, and the people are interested in following it up so they can give some value by way of contacts, perhaps not so much in their knowledge or understanding. But also don't underestimate the value of experience that they may bring to the table. For example, if you are strong in sales and marketing, and the product team who are the starters of this company are more, let's say, product developer type people who are not that skilled in sales and marketing, these guys can save you a lot of money instead of you commissioning a third party. So there's also that part. So one part that can give you that, the tax saving is an incentive in itself. Now, the structure of how you actually use that money is complicated. So for that, I mean, I don't have a strong opinion about a GP type where a person put the money and then they hope that somebody's going to look after it. That would be the most efficient way of doing it. But probably people who are in jobs and only are going to be investing $10,000, $20,000 would like to know where that money is going, which, by the way, is not in their interest. It's better for them not to know, because then the risk will be diversified. So definitely a structure is better, because that $20,000 will go hopefully into 20 companies. If you're investing only $10,000, $20,000 yourself, you're going to invest in only two, and therefore your chances of success will be much reduced. So therefore, a structure is always better, but it's the harder thing to go with. And by the way, most of these things that Barbara was suggesting, I mean, for example, if I can have any value add to this, is also pro bono. I mean, so none of us are trying to do this thing in order to earn, like, management fees and carry charges and stuff, but somebody will have to earn that, you see. And then perhaps some people, once they've left their job, can say, I can support in my skill, not as a manager of it. Now, we can't say which of these things will work or not, but definitely diversification is better than not. Investing your own money is never the best way of your money being invested. because you can't put it into so many companies. And for that reason, a structure will be better. And I yield that floor to people who have managed funds. I've only managed one fund for 5 years. And those 20 companies that we saw, by the way, 10 of them were startups, but with people that worked with me. So we started these companies. It's not that these were, we met entrepreneurs and we said, wow, you're a genius, I'm going to give you all my money. It wasn't really exactly like that. These were constructed companies, you see. And that's actually also another type of angel investments that I believe in, meaning they don't have to be necessarily young entrepreneurs. Some of them may be people in their 30s and 40s that said, now's the time for me to start a business, you see. And that's a better money to go to if you end up doing only one or two. At least you know where it's going. And then, of course, it's still risky. So that can be one way you can look at it.
Okay, thank you. So Peter, can I ask you then that, firstly, how would you go about educating a CEO, whether that's someone who's been an entrepreneur themselves, who's been through the journey, to become an angel investor, if that's something that they were considering and they don't have any experience with it? And how would you tackle the questions around risk and failure?
Okay, so risk, failure, and money and the education. Just before we do that, can I just challenge you on that 1%? I mean, in the UK, about 600,000 companies are set up every year, but many of those are shelf companies. We think there's about 60,000 companies that look for investment and about 6,000 that get it. So that means it's actually 10% that are looking for investment. Now, please do bear in mind, if you're entrepreneurs in this room, that the best money you'll ever get is from customers, not from people like Paul and I. Because customers, Candice is clapping at the back there, customers prove product market fit. In the end, you need a business that's selling a product or a service and generating gross profit from it, because that's sustainable. No business is sustainable purely on the basis of equity going into it. So product market fit, the other advantage, of course, of getting money from the customers is you don't dilute the equity. So you hang on to the whole company, and really importantly, you haven't got Paul or I on the board bullying you, inverted commas, to grow the business. Because in the end, the ones that have external investment, although they will get through a hurdle to start with, if you're doing a drug discovery company, you can't do that from customers clearly, you get there faster. In the end, we'll push for very much faster growth than you would do it by yourself. So I just wanted to make that clear.
No, I understand,
UK
yes.
companies,
Yeah.
fine. So to come back to your question, sorry. So educating the CEO. Now let's break it into two parts again, which Paul started with, which is money and skills, the smartness and the money. So if the CEO, or the executive, let's call them executives rather than CEOs, has got spare money and they want to put it aside to support the ecosystem, they're probably better off doing it through a fund, as Paul said. There are funds out there that will take the money, take some fees, of course. They'll take a carry, which is a profit share, etc. But you don't have to worry about that. So the money's being used. So that's one way of doing it. Another way is to go in and invest individually, which what I do. I've put investments individually on the shareholder register in 67 companies. So I don't go through a nominee structure or anything like that. But that's hard work, I can assure you. It's hard work finding the deals and then supporting the deals if you want to do. So that takes a lot of time. That's why you've really got to be part of an angel group. However, I think the question really is, how can they add value? How can they use the skills that they've built up as being an executive? That does need training. It needs training for them to understand what parts of the skills they've developed are of use. But importantly, to again come back to what Paul said and a year ago when we were on a panel, similar panel, is that it's actually really quite easy for an exiting, i.e. retiring or whatever, executive from a big company to behave badly in front of the entrepreneurs. Not badly in terms of something that they feel they're getting wrong, but behave in a way that doesn't work in a small company. The behavior's not. It could be as bad as bullying, and I use bullying in a very loose sense, not a negative, too negative sense, that they will say, this is how I did it in my company, this is how you're going to do it in this company. That is not the way to think about an entrepreneur. An entrepreneur it's their business, you're investing money and time, and they've got to make the mistakes. You can advise them, you can mentor them, but you cannot tell them what to do. So telling the executives how to do that is training. It's a mindset change. It's not their business any longer. It's somebody else's business. And that can be done with a variety of methods, including my book, plug it again, Investor to Investor, and lots of other courses. There's some that Baybars does in London, and there's one going off in Croatia, and sure there'll be courses here in Turkey doing that as well.
Oh, great. And I'm just going to go back to the first part of your answer that you did about entrepreneurs. Actually, the best way to run a business is to find customers yourselves. And I think I can say that from first hand, because when I started my own business, I actually didn't plan to do a business, and the first thing that happened was that I actually had a prospective client that came and asked a question, and all I did was solve a problem, and that led to more clients. So no funding, no nothing, and at the end of an 11-year period, I managed to sell that company with 1,500 staff, 50 offices around the world, without a single piece of funding and 100% ownership. So there are ways to actually run a business and be successful without going for funding. So I think the best entrepreneurs are the ones that can find the clients and actually establish those businesses and go on to succeed with them. But here, since we are talking about converting CEOs to angel investors, I guess the other thing that I'd like to ask the panel is really about what other, you've talked about tax incentives that governments offer to individuals and to companies to be able to invest in entrepreneurship, and I know the UK has various incentives as well. What else can the government be doing to support CEOs or to encourage people to invest into startup companies and entrepreneurs?
Do you want to do that first? Okay. This is something I mentioned in the panel earlier on today. There are a number of things governments should do and could do. So there is the tax relief for the high net worths, both on investing and on potential and positive exits and on negative exits. In the UK, we can offset a proportion of the investment against our income tax when you invest, and if it fails, you offset the difference against your income tax, and if it succeeds, you don't pay any tax on the success, subject to a whole load of rules, of course, but the rules are pretty flexible, pretty easygoing. I was in Dublin last week. They have a similar system which is almost unusable because the government really doesn't want to do it. They feel they have to do it because the UK is doing it. So that's the first point. So that's for the investment. But there's a whole stack of other things the government can do. The biggest of all is regulatory friction. So making it fairly easy for companies to be set up, companies to file the various accounts they need to do, the taxes, etc., companies to raise funding from places, companies to employ people, to fire and to hire, the whole labour market and the flexibility of that. And then on top of that, you've got IP ownership, you've got a whole load of other things which governments are gradually getting their heads around. Some governments much slower than other ones, but I think all governments now realise they have to put effort into it.
Okay. Paul?
I think the worst thing for governments to do is to try to allocate money to it. Because unless that money is used specifically for like export support program, that's efficient, for example. Some governments have done that for export credit, and so that kind of like good public money can go in that kind of direction in some cases. But for startups and setting up an ecosystem, for example, the way this country has done it, I think work quite well in like an income tax incentive, which lowers the cost of the startup. So if you're recruiting 100 people and you don't have to pay income tax as an owner, that cuts your invested capital by about 30-40% minimum. So you can actually get 100 instead of starting to struggle with 60 or 70, for example. So the tax incentive. The other thing which I think is extremely important is to encourage private money to go into it, exactly as you indicated the UK have done, again, which is a very smart approach. So that they want you to invest your money, and they incentivize you that you, of course, end up paying less tax if you do. And if you don't succeed, you can set that off. Because if you fail, that's if you're using your own money. Whereas here, for example, what they've done is that you register as an angel investor. That's money you're not actually getting, but you're earning. Your employer is paying it on your behalf, which is the employer's contribution part. And that's an amazing, I think, efficient way of getting you to take that risk and follow it, because the chance of success is higher than if the government took that money and said, okay, I'm putting a public officer, come and apply for this money. But governments are good, I think, when they are giving grant money as opposed to invested money. So the governments are excellent. I think this country has also very good grant money, you apply for it, they give you a limited amount, especially if you have a product. If it's R&D, there's some level you can apply for. If it's to support an expert, you've taken the R&D risk, they give you also some support. And I think that kind of like is efficient. But to get to that, you need to have had started the company, have some level of activity. And that's why if you are an executive, and I think even better if you're not a CEO, because the problem with CEOs, by the way, just to elaborate on that, is that they think they are a boss when they're not. You see, so CEOs are not actually good people in that sense, but you have to have a boss somewhere. So if they go and bust this bloody startup, that's not right. You see, I think that's the part that we kind of agree upon. So the efficiency of the government in promoting executives to invest their money is amazing. So then you can have, for example, 100,000 investors, 200,000 investors. That can transform. And even if they invest their own money, that's not a bad thing. By the way, even if they say, I'm going to invest in these two companies, not through a fund, for some people it works better because they have a skill and they can give that skill to provide skill support, which cut the cost, by the way, or save the time for that startup. So you have to have, as they say, skin in the game. So if the government take that money from the people and then try to give it back in a form of incentive, the persons managing it have no skin in the game. So somebody have to put their own money. The people who are helping you invest in multiple companies have to earn carry. So they have to be on a low salary that says, I earn from the success of the business. That's how I feed the success. That's how you, you become part of the risk taking that then spread the reward to those who took the risk.
Oh, great. Thank you very much. Ugo, do you have any comments on that subject?
No, really, but great to hear. And as I said, I'm here to actually see really how it works. But I was also doing some research, which is Turkey now, also tourism, the economy minister and the TÜBİTAK raised a fund for the Starters Hub, and which is they're supporting really the starters for their journey. And I think it's, again, it's great to hear.
Thank you. No, it's obviously a fascinating subject. I would like to actually put it out to the audience out there. If you've got any questions that you'd like to ask our panel on this subject, please feel free to put your hands up and ask. We have somebody there.
Have we a roving
Do we have
mic?
a microphone?
While the mic is coming, I can give you a quantitative answer to what you indicated on the government support. For example, in the companies that I was involved with over the last 5 years, money that came from government, TÜBİTAK, that you're saying, and also European Union fund. In the European Union fund, they contributed over 4 million euro in the investments where the new entrants contributed 2. Imagine, so the company got 6 million, of which we actually in total contributed 2 only. In the rest of the companies, it was around 30%. But the government put the money knowing that others have taken the risk. You see, that becomes more efficient. Just to give you a quantitative answer.
Okay. My name is Mandisa Chupadamba. I am from South Africa, from the Small Enterprise Development Agency. My question or comment is that often we focus on the entrepreneur that is looking for an investor, and we prepare the entrepreneur or the company that is looking for an investor. But we seem to think that for the investor, it is something they should grow up with. Therefore, they should, if they have money to invest, they should understand how to invest. Therefore, I am checking within the forum here to say, what is your experience in terms of the needs of the angel investors in a way that says, how should the ecosystem prepare them? How do we prepare these investors? What programs are in place? What government support goes to them to make the environment also enabling for them to de-risk the environment for them as well?
Thank you for that question. Peter?
Yeah. So I was lucky. I learnt everything I've learnt from being in the right place at the right time. So although I haven't said this in front of this audience before, I stumbled into angel investing about 12 years ago when I invested in a friend, and it exited quite quickly. And because I was in Cambridge, I then joined a group called the Cambridge Angels, which is 60 people, unfortunately mostly male, and my age, so that's like, and I'm now chair of that, and I've learned a huge amount from that. So the best way for an angel to learn is to learn from other angels, as you'd expect, to shadow them, to follow them, to co-invest with them, etc. And again, this is a real big plug, but remember, I'm an entrepreneur. I've turned that into this. So all the experience of how this is really for newbie angels to understand what it's like, how to find entrepreneurs, etc. As it turns out, it's mainly entrepreneurs reading it, because angels believe they know everything from day one. I must admit, I didn't think that. I would have loved to have had this. So in terms of learning, it's human learning. There are resources, not just this one. There's a number of them in the States. There may be, anyway, Baybars, if he's in the room, he's got a book there, hasn't he? Which will teach you. And there will be, depending which country you're in. And then there's plenty of online. The Kaufman Foundation in the UK, Jenny Toother runs our trade buddy in the UK, has got an online program, etc. So yes, you need to learn. Bear in mind, whatever we do in angel investing is super, super, super risky. You know, there's risks all the way along the line. And so none of us want to lose all our money. If we wanted to do that, we would donate it to a charity, wouldn't we? We wouldn't give it to, it feels like charity donation anyway, I can tell you. And just to give you, something I often say is that if I was to put money into, when I put money into an angel investment, I have given that money away for good. I don't expect it back at all. When I get it back, even if I only get 10% back, I'm happy. You know, I shouldn't be, because effectively I've lost 90% of my investment, less whatever tax reliefs. But I'm actually happy I've got something back, so it has gone completely. So reducing the risk when you write that check is obviously important. That's just human nature, isn't it, for all of us? And so soak up as much information as you can before you start.
And I'd just like to add to that if we are saying that angel investors are serial entrepreneurs anyway, people who've already been through that journey, then quite often an entrepreneur who has been through that whole pathway, if they come to a stage where they are offering investment to a startup, then when they look at the funds, what funds they're actually required for that company, and they break that down, you can often find that some of that money is actually going to waste. So for example, if a startup comes to you and says, I'm going to spend 50,000 on legal costs, accounting costs, and so forth, you can quickly, with your experience, say to that startup company, well, actually, I can provide all of that for you through my experience, and therefore, you know, you have a head start to that company in advance. Any other questions?
You can take one solution.
Okay.
Sorry.
My name is Mlemwa from Zambia. So I wanted to find out from any of the CEOs, what would you advise is the best way to convert? Is it converting CEOs that have an entrepreneurial background, or CEOs from the corporate arena that have access to finance that they willingly give out anyway during things like CSR? So which are the ones that are easier to convert in an environment that we don't have angel investors structured yet? Which would be the easier point of entry?
You know, one thing that people also should be very careful is that if people are investing the money because they think that they're going to make money, I mean, the sole purpose of it is to get a return on the money, that, you know, then they should compare angel investments with other types of investments, including no investments, including buying into the stock market, which, for example, is at least liquid. If you need the money, you can always get it. This is a black hole. If you put the money in it, you cannot exit until they get an exit. So these are also important parameters to consider, that in your investment portfolio, people need to invest their money the way they like, that suits them. And some type of people who are called angels for no coincidence is that they want to do good things. Like my good friend here, if he thinks that he puts this money and he ends up not losing, he feels good about it. If he's earning, he reinvests the earnings. So that's the kind of person he is. I mean, it's probably, you can say, that's how he's spending his money, to try to do good, you see. So it's very important to consider this, because people shouldn't think that it is easy to enrich yourself by making angel investments. This is a way that you give back to society what you have been given, especially if you are a quote unquote an overpaid executive paid above average. So that's the incentive. Now, should you invest it in what you know, or should you invest it in something you don't know? If I understood your question correctly, this could be one part of that question. I would say, in general, it's better that you invest your money in something that you have not been working in. So another area, an emerging area, something new. You see, if you're in trade in a conventional, type physical stores, you say, let's try e-commerce, for example. That may be a sister type of activity, you see. But I think we should all be very careful. Of course, all the people who are coming to these events have an interest in angel investing. A small part of the investment should be angel. A higher part should be post-angel, venture capital, etc., all the way up to a liquid asset. In the old days, we used to hear people or parents tell us, invest in real estate is the safest thing to invest in. And we have seen what's happening to real estate. I mean, I just came back from Dubai and seeing that the largest companies traded are down 70% on real estate, the largest ones, who have been most successful. So real estate now is a risky venture in itself. So people like my good buddy here that wants to help others should be, definitely, this is not many people you will meet of this character. You see, that's very positive and to be encouraged. That's why governments need to listen to people like that, and they should put their part of it, because governments are the ones that don't know how that money can be invested. So they need also good people, quote unquote, who are willing to give something and are not greedy in their expectation for a return, you see?
Thank you very much, Paul. We have one final question, and then, yes, sorry.
Thank you. We are going to form a CEO's Club fund. Will that fund be generated from the CEOs, or the CEOs in addition will be now investing to startups individually? Is it the right place to ask such a question?
Could you repeat that for me? So you're saying the CEO fund?
Yeah.
Sorry, I didn't quite follow the question.
We are planning to establish a CEO's fund for investment.
Yes, I think that's a question outside of this forum, probably.
Oh,
yes.
Okay. All right.
Okay.
Yeah.
Thank you.
If that's the case, then
yeah.
the right place.
I'll talk to you on the way out. Yeah.
Thank you very much.
Yeah.
Okay, so we're going to wrap up for today's session. But before we do, I'd like to ask each of our panelists just to give us one top tip for becoming an angel investor. Please.
Well, on the CEO basis,
yes.
and on the basis of the subject of the panel or executive, which I think is a better title, in the end, before you do it, you've got to understand your own risk appetite. CEOs, particularly if they're managers, have got a big salary. They haven't had to take much risk probably on the way up. They've probably been successful the whole way. They're probably pretty risk averse. They might have lost their job once or twice, perhaps, but that may not have happened at all. Understand your own risk appetite. To answer Paul, 10% or so, 10 to 15% of your total wealth, the maximum that should go into angel investing. But it could well be, and probably should well be, for a lot of people, zero, once they understand the appetite. Once you've got your appetite, sorry, this is a very long answer. Once you've got your appetite sorted out, then just learn. And that's all I need to say.
Paul.
Yeah. Diversify through a structure that is professionally managed, maximum 10%. I mean, that kind of like is a no-brainer, and that would work for angel venture, any type of, by the way, even people who think that they know how to dabble in the stock exchange aren't very good at it. And it's always better to have someone incentivized to manage your portfolio and try to beat the index and stuff like that in general. And I think one very important part of it is that speak to your husband and wife before you do it. It can cost you.
Great tip. Thank you.
I think it's, as Baybars mentioned this morning, is innovation. That I think that we should all keep innovating and not giving up.
Thank you very much. I'd like you all to please give a big hand to our experienced and learned panel for today. And thank you all for attending this session. Hope you enjoyed it. Thank you.